Previously on Dukascopy TV, we've looked at Swiss banking secrecy, and if you haven't seen any of those programs yet, head of course to our website at dukascopy.com/TV. However, continuing the theme a little, we have in the studio Lawrence Lewinson, founding partner of Axia Management. Thanks very much for coming to the studio, Lawrence.
You're welcome.
I just want to start by asking you, you specialise in investing in growth companies.
That's correct.
I know that you've recently just set up a recent company of your own.
Mm-hmm.
How much do regulations play a part in that venture?
Well, that's kind of a growing business today. The actual setup of an independent company today in Switzerland is relatively easy. The implementation takes maybe a few weeks. Registering it takes a few days as well. But the actual running of the company is where it becomes a little more hairy. And it's obviously becoming more and more regulated. And my view today is that independent managers are going to merge more and more to be able to cope with the expense, the compliance, and the general regulations being imposed by FINMA in general.
Now, what about this? You were telling me before the interview about the companies with assets of below 100 million, that there are fewer regulations. Can you tell me a little bit more about that?
That's more on the fund management side. Basically, what looks like the general regulation is going to look like in the next few months or year or so is that companies that manage a fund that is under 100 million in size will not be as stringently regulated as companies that manage funds that are above 100 million.
Which is a good thing.
Well, it's a good thing for smaller companies, for sure. And it allows more innovation as well.
And is that a part of encouraging companies more to set up an environment that is perhaps a little bit, maybe at first a little bit scary as such because of the secrecy, or anything like that at all?
We're talking more wealth management if we're talking about secrecy. In the fund management, I think one of the things that will make Switzerland attractive if eventually banking secrecy does go away is to make the environment more friendly for fund managers to come to Switzerland, set up their own business and develop their business. And to start up companies with less than 100 million where regulation is not as stringent might be something very attractive, and that could boost the Swiss banking market in general. I
can see how that would work, and I mean I know that at the moment there are not necessarily all the best stories in the news about Swiss banking at the moment, with maybe talk of accounts not necessarily opening offshore, various all that sort of area, which we'll at some point talk about. But I know we can't talk a huge amount about that at the moment. We see a lot of growth companies in the technology industry. Right. What's been the biggest hurdle for you operating in Switzerland so far, where banking secrecy obviously prevails?
Well, as I said, the process itself is relatively easy. It's becoming more and more difficult to actually manage a independent company because there's more and more regulation requirements, there are more compliance issues, and to a certain extent, although it's not the case today, we may be forced to be registered with FINMA. Every single independent manager, which is not the case today, and that's quite heavy to carry. And if that does happen, as I mentioned, I think that will force independent managers to merge so that they can cope with the compliance environment in general.
And for, say, some people new to the world of finance, why particular is FINMA not necessarily a good thing for you?
Well, I'm not saying it's a bad thing. I'm just saying that it's a heavy thing to carry. And it involves a more, let's say, a more important structure, more assets, and more capital. So for someone that's starting in the business and would have to upfront be registered with FINMA, it might not be possible to do. Whereas setting up a company as an independent today is relatively easy. It only requires 100,000 in capital.
Really?
Yeah. Just something that could change, and with further regulation, it could go to 500,000, or it could go to 1 million, or even more. And if that happens, that's going to eliminate a lot of independent managers, or will force them to merge.
Okay, and so the idea of having to join up with FINMA, that has come from perhaps something that has obviously been a little bit, they've been unsure or slightly scared about how the future of Swiss banking is going to
well, there are a lot of issues. I mean, obviously the scandals that we've had, and we've had one recently with JP Morgan, is just an example of why people want more regulation. Just 3 or 4 years ago, we had the Madoff situation, which has opened the door wide open to more regulation. And all these things are building up. And you know, in this environment, things tend to go to extremes. And we used to have less regulation, now we have too much regulation, perhaps. And at one point, we'll come back to the mean. But for the moment, it's becoming more difficult.
So you can see a retraction at some point in the future of regulations?
Well, one example of that is the fact that for fund managers, if this is the case, that a fund manager can set up a fund for less than 100 million and have, let's say, a less stringent regulation, that's one example, because that's something new. That's something new, and it's something that's looking like it's becoming a little more friendly for the independent manager.
Okay, great. Thank you very much, Lawrence, for coming into the studio today.
You're welcome.
Well, that's about all we've got time for here on Dukascopy TV. Of course, stay tuned throughout the day as we bring you continuous updates and more exclusive interviews. Until next time, though, goodbye.